Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply starts with another video, and this time this video relates to a couple of companies which looks good from a 4-5 year point of view as an investment. So let's get started. So first of all, disclaimer that it's not a stock recommendation. Whatever stocks that I discuss here is purely for educational purposes. I'm not a member of the NSE and BSE, and that I'm not an official portfolio advisor. These all will be my personal opinion, and any buying selling decisions that you take is purely on your discretion. Kindly do consult your financial advisor before taking any call. This is all my experience over the last 12-13 years being in the market that I bring to you all. So before I talk about these couple of companies, here's small request: kindly support me on Patreon. Once you do that, it'll help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, analysis on different companies, sectors, discussion on domestic and global economies. Whatever queries you'll be having, I'll answer that, and watch list updation of stocks that I believe that are doing well or could do well in future in this market. So before wasting any time, let's get going with the stocks that I like. And so these are a couple of stocks I like: Global Health, which is Medanta Limited, and UPL. I believe that over the next 2-3 years these could do well, and I'll tell you the reason. So first, let's look at UPL. The market cap of the company is at 40,000 crore, and the stock has taken a battering over the last 2-3 years. If you look at it, the stock has fallen all the way from 800 odd levels, 830, 840 levels, all the way to 500, 450 levels, so nearly halved from those levels. About this has been a fall of 40-45%, and now it's trying to retract back. Now what has gone wrong with the stock has been the numbers altogether. So if you look at P&L statement, things were going really well between March 17 till March 20th, March 20, even March 22, and then things started to fall down. So what has happened is that from 14,000 crore sales till March of 2020, we did 35,700 crores of sales with 19% margin. There was some extraordinary, and that's why there's other income, negative, positive, etc. Eventually the profits started to shrink a bit, and the stock prices started to go down. So sales figures weren't that great, although sales kept on increasing, but increasing at decreasing pace. So it increased at decreasing pace from 21,000 to 35,000 here, and then it reduced. The pace of increase or percentage increase year on year decreased. So 38,600 became 46,000, 53,000. Eventually last year sales dipped sharply, profits dipped sharply, margins dipped appreciably from 19% to 10%, and hence the drop in the stock price. Otherwise, overall the company has been doing well in terms of shareholding pattern as well. There has been quite a good amount of FII investment that we see. DIIs are also invested in here, and there is a significant public shareholding. So what does UPL do? Basically, it's in the pesticides and agrochemical division, and just to give you a snapshot, UPL is leading provider of agricultural solutions and services with 14,000 plus product registrations and a presence in 140 countries. So from being a company of only about I would say about 1,000-2,000 crore market cap, the market cap has swelled to 40,000 crores. What I believe now is there is a revival in the agrochemical space, with hopefully government pushing in this space, with more reforms into the, you can say, agri and the rural expenditure will increase, and globally also agricultural as a theme will pick up. So current valuations are significantly better than what they were say in 2022 or 21, and hence I believe if you look at the PE of the stock, currently with lower profits, you would say that the PE is swelled, but even better assessment would be market cap to sales, and currently the stock is trading at only about 0.9 times market cap to sales, and one more good quarter could take it below 0.8, whereas an average has been of 1.1 times or so. So I believe that current levels are decent enough to keep on accumulating over the next few years. For the next 4 5 years, this looks a pretty good investment in that regard, and we could see the stock go up higher. Even technically speaking, if I say, and if I see it on the trading view app, even technically speaking, UPL is something that I believe should end up doing well. What should be your long-term stop loss? I'll just give you an idea. So I believe that a stock like UPL, so the 50 DMA is around 542. What you need to do is, this has been the upswing from around 450 levels all the way to 570 levels. So any dip towards 510 500 is a good buying opportunity. Keep a stop loss around 480. That's my assessment, that around 480 keep a stop loss, and I think you should be fine from a long term point of view. Second stock in this list is Medanta Limited, or Global Health, and we all know about it. Numbers have been pretty decent quarterly, yearly. So year on year, this time around also 15-16% growth. Profit dipped because margins dipped a bit, but overall numbers were pretty good with some taxes. So what happened was, there was a 10% year on year growth this time around, but March quarter is not the best of it. Probably what you need to look at is the last 2 quarters. Probably the September and December quarter are the best, and so this correction in the stock price is a great buying opportunity in Medanta. On balance sheet and ratios basis, it's pretty good. So on a longer term time horizon, with you can say an FII holding of 12.9%, DII 10.5%, even in public shareholding, there is a significant around you can say 36% out of this 43 and a half. 36% is with the large shareholders, and that's why I believe this is a stock to accumulate now. When it was going up, everybody wanted to buy into Medanta. So if you look at the stock price, it surged and surged to 1435 in February of 2024, and since then it has been going down. So the stock is down 20% from the top, and these are decent levels to start investing. I won't say that these are the bottom levels. We could go down another 150 points from here, but keep on accumulating over the next 4 5 years. Again, this could give you a significant return over this period. So again, keep a 15 to 20% stop loss from your final average price, but this is also a stock to look forward to. So this was a short video on a couple of stocks that I believe should do well over the next 4 to 5 years. Please do like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly do support me on Patreon. Thanks a lot for watching.